I'm Yahoo Finance Executive Editor Brian Sozzi. You're taking a look at a live shot of the opening bells on Wall Street on this Monday morning. CF Industries ringing the bell at the NYSE. D. Boro Arc Acquisition Corp. Sounds like a SPAC, getting things underway over at the NASDAQ. Now the rally, of course, rages on in what is becoming somewhat old hat in 2025. Stocks have entered a new week of trading, hovering around at record highs. Markets are rallying around the notion the Fed slashes interest rates in September to jumpstart a potentially rapidly cooling economy. Attempts by the bears to knock down stock prices continue to be feeble at best, but that doesn't stop them from trying. A new survey of fund managers out of Bank of America found that 91% of those polled think U.S. stocks are overvalued. This group is suggesting investors rotate into lesser-loved sectors such as utilities and energy. Some of the street are also speculating a hot CPI reading on Tuesday could reignite stagflationary fears, which wouldn't be a great thing for stocks. Now, Opening Bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money in your portfolio. Let's get a pulse on the early market action. Yahoo Finance senior reporter Brooke DePalma standing by at the NASDAQ in Times Square. Brooke.
Good morning, Brian. Let's kick things off with the NASDAQ. Right now, all three major indices are in the green, hovering above the flat line, but the NASDAQ up 0.02% after the index hit two record highs last week, and now investors are hoping to see that momentum continue. If you take a look at the YF Interactive, over the past 5 days, we've seen the NASDAQ rise about 2 points, or 2% rather, and now we're indicating that once again this week we will sustain that momentum here, as you can see here, hitting those two record highs at the end of last week, and now indicating that we're opening higher, but now we're bordering the flat line. The S&P 500, also want to bring that to your attention after the index did close slightly lower, just missing that record high on Friday after market close. But what we do know is that strategists at Citigroup have lots of momentum, lots of excitement as they raised their target for the S&P 500 year end, saying that tax cuts could offset the impact of President Trump's tariffs. They did raise their year end target to 6,600 points. That's up from 6,300. Right now, the S&P 500 around 6,400. And I want to take a look at the NASDAQ, some key players there, and what's really leading this momentum into the trading week. We are seeing Apple fall a bit after the company stock rebounded last week after they hit the best stock price since 2020, after they made a deal with President Trump saying that they would invest $600 billion in the U.S. This was sort of their deal to offset the impact of tariffs hitting their iPhone manufacturers. Also, Nvidia also bordering the flat line after they priced in that trade deal, so you could say, with President Trump saying that they would pay 15% of their China chip sales to the U.S. They did gain some momentum in market close on Friday, and now we're seeing that stock move roughly flat today in the early innings here. I also do want to hit on AMD quickly. That company also saying that they did reach a deal to pay 15% of China chip sales to the U.S. That stock has been under pressure over the past 5 days, now down about 2% in this early innings of this market week, down about 4% in the last 5 days. Once again, all three major indices roughly flat to make your way into this week's trading session.
All right, thanks, Brooke. Appreciate it. All right, we're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, Nvidia and AMD will be cutting the government another check besides just taxes. Two chip giants have agreed to give the government 15% of the sales from chip sales in China. Both agreed to the financial arrangement as a condition for obtaining export licenses for the Chinese market from the Trump administration. Number two, complacent investors. Speaking of hot tech names, a new survey of fund managers from B of A reveals the Magnificent Seven long trade remains one of the most crowded in the markets. But with the likes of Nvidia and AMD seemingly keen on kissing the ring of President Trump, are investors underpricing key risks in big tech? We'll discuss. Number three, Bitcoin boost. Bitcoin prices rallied hard overnight, close to $123,000. Some of the gains have been given back, but not all. The move is noteworthy as Bitcoin had been stuck in a tight trading range since the early part of July. My roundtable for today, John Campbell, Allspring Global Investments Portfolio Manager of the SMID Core ETF. Tom Essay, Seventh Report Research Founder, and Yahoo Finance Senior Reporters Brooke DePalma and Jen Schoenberger. Good to see you all, Tom. Let me start with you here. That Nvidia AMD news, it's something that, I haven't seen covering corporate America for quite a while, giving 50% of your revenues just to get your sales back in China. What's the read-through there, if anything, to the broader AI trade?
Thank you very much for having me on, Brian, and it's great to be back. I think that what the biggest takeaway for me is that these companies are ready to play ball with the administration to continue to grow their sales, right? And who knows how long this negotiation took place. But at the end of the day, the deal got done. The chips are being sold to China. Now, obviously, 85% of revenues out of those sales is not as good as 100%. But if I'm an AI focused investor, if I'm looking at my portfolio and I have a lot of exposure to these chip companies, I'm feeling pretty good about this because 85% is also a lot more than zero, right? And so now we can kind of put this risk to bed. Yes, these companies are ready to play ball with the administration. The administration is going to set the rules in a way we have not seen before. I mean, you're right. None of us have seen the government kind of get a piece of the pie in this explicit way before. But at the end of the day, the chip sales are going through. That's going to mean more revenue for these companies. I would walk away from this being very happy as an AI focused investor.
John, let me get over to you. At the top of the show, Brooke mentioned Apple coming back in large part because Tim Cook is warmed up to the Trump administration, preventing some form of a gold trinket to the president last week. Is that one of the conditions to get involved with big cap tech here? At these valuations, these companies, if you want to pull the trigger on these even more, these companies have to have a strong relationship with the Trump administration.
It is very weird. As a free market capitalist, I don't think I really understand it, but it does seem to be a condition of doing business with the administration. So, as the previous guest mentioned, it's good for Nvidia, it's good for AMD. Nvidia had taken a large write-down on H20 sales when the ban was in effect. So, it's in general, it's good for the AI trade. I don't like what it means for free market capitalism.
What does it, John? What does it mean? What does it mean?
Pay to play just isn't the norm in the U.S. So I think it means that companies are going to have to just try harder to work with the government. And I don't know, it's just a little unseemly to me.
Jen, you know who the president hasn't been able to move? It's the Federal Reserve. But still, this is a market pricing in a strong probability of a rate cut in September.
Yeah, Brian, I think the big catalyst though this week that we need to be watching for is the consumer price index and core CPI, which strips out those volatile food and energy prices, expected to pop up to 3% for the month of July. Remember, Fed Chair Jay Powell and the rest of the Fed very closely watching the impact of tariffs on inflation, and it looks like it's going to continue creeping higher. At 3%, you're a full percentage point above the Fed's 2% target. At the same time, we had that weaker than expected jobs report. So I think that we're still in a wait and see mode for the Fed when it comes to September. If we get a jobs report right before the September meeting that shows that job growth bounced back and we're still dealing with higher than expected inflation, I'm not sure the Fed pulls the trigger in September, in which case you're going to see those dissents again. And if Stephen Myron is indeed appointed at that point to the FOMC, we could see 3 dissents at that point. However, if we do get another weaker jobs report pointing towards perhaps negative job growth, then maybe the Fed will act. I think at this point, though, we're starting to see the Fed sort of in contention with the dual mandate. Do we pay attention to the inflation side of the mandate, or do we pay attention to the inflation side of the mandate, which is further from our goals?
Tom, I know you, as someone that reads your notes daily, I know you're an avid watcher of macro data, especially the jobs data. Is just playing off what Jen just said, is now the time to fade all of this optimism that we do get that September rate cut?
So I think if you're just looking at the data, the answer would be yes. But as we've just been discussing, this is not a unique time where we can only look at the data. The administration and their impact on various facets of the economy has to be considered. So if I'm just sitting there and I'm truly data dependent at the Fed, then no, I wouldn't cut rates. You have unemployment that's well below 4.5%. Yes, job ads are down, but they're still decently positive. You have claims at still near decades low. So I wouldn't be cutting. And meanwhile, to the previous guest credit, CPI is going to print 3%. But if the administration is going to browbeat the Fed relentlessly, and Trump has essentially thrown out a carrot that says, hey, first Fed guy who cuts gets the job, and I'm obviously exaggerating, but you get my point, then all of a sudden we're going to see this momentum. So I think the Fed does cut in September, although it's not just going to be because of the data. It's going to be because of all the other stuff that we're seeing.
And Brooke, amidst all this optimism, B of A out here saying again today, another month of these fund manager surveys saying Magnificent Seven, one of the longest or most crowded trades on Wall Street. In its simplest terms, that means everybody still loves the Mag 7. They think they're perfect stocks.
Yeah, this was the most bullish fund manager survey from B of A since February of 2025. As this momentum has continued throughout the year, earnings are largely shrugging off the impact of tariffs, and big tech is really leading the way. Some key callouts from that report was that long Magnificent Seven is considered the most crowded trade. That's followed by the short U.S. dollar and then long gold. And what we've seen is investors really flock to this AI trade, to the Mag 7, Nvidia, as well as others within that. And B of A sort of pointing out that not only is this the most bullish, but also that there's been this rebound in optimism heading into this year and into the market. And that's what we're largely seeing, the return of investment here when it comes to Nvidia, Microsoft, and Meta, as well as Google. As you could see, year to date, that momentum continuing, especially after strong reports last week, or rather the week before.
It's all a blur, Brooke. It's just all a blur in this hot and heavy news cycle. John, let me get back to you, because we're also watching a very strong move up in Bitcoin. To me, it almost seems like a delayed move, given all the news we saw last week. Of course, President Trump signing off on crypto being part of 401k assets. Does Bitcoin at $123,000, does that interest you at all? Do you think it's an undervalued asset class?
Well, in our strategies, we're playing vanilla equities, so we don't play in crypto. And I look at it as it's a speculative asset that it does give us a good measure on investor sentiment. And so clearly, Bitcoin at all-time highs. It's an indication of a bit of froth to me. We're also seeing higher levels of margin debt. We're seeing lots of option trading. We're seeing low levels of cash. So I use it as more of a sentiment indicator, and it just shows that the bulls have been in control.
Tom, your thoughts on this move in Bitcoin?
Yeah, it makes sense to me. I mean, if you look across the scope of the markets, everything that's risk asset oriented is rallying. And there are various reasons for that, but I think Bitcoin is part of that. However, I'm going to disagree slightly with the previous guest. I don't look at it as purely a speculative asset anymore. Every month in the Sevens report, we're now doing a Bitcoin and crypto industry update. And the dissemination of the use of crypto and Bitcoin across traditional finance and the banking industry is truly remarkable. Again, I'm not trying to link everything back to the administration in this chat we're having, but the reality is this is the world we're in. The administration is pushing crypto. They are pushing Bitcoin. Bitcoin is the lead dog in the crypto market. So is it short term a little frothy? Sure. But longer term, there are some fundamental changes here that I think are bullish for it, and will send it much higher in the future.
John, real quick to you. Could you, just based on what Tom said, is it almost time to view Bitcoin as a stock?
That's a good question. I think a lot of companies have tried to turn Bitcoin into stock by becoming treasury companies to a great deal of success. But you can't treat it like a stock because there are no cash flows that you could discount to determine what an intrinsic valuation is. So maybe more like a digital gold is probably a good analogy.
All right, straight ahead. One management team at an often high-flying AI company won't be having a great Monday. We'll dive in on my stock of the day. Let's fire up my stock of the day, C3 AI. Cover your eyes on this one, as this formerly AI high flyer stock is crashing today, and it's warranted. C3 AI issued terrible guidance late Friday as it aimed to reorganize its sales force. For your notebook, you never want to see a company issue bad guidance after the market close on a Friday. The company is also reeling as spiritual leader and CEO Tom Siebel continues to deal with health issues, which has prompted him to search for a successor. D.A. Davidson analyst Lucky Schreiner called the earnings news, quote, catastrophic. Still with me, my roundtable, John Campbell, Tom Essay, and Brooke DePalma. John, I want to get over to you. I mean, it's we've seen the strength continue in AI trades, but then you have this company like C3 AI. The stock is absolutely crashing because of a bad pre-announcement. But this morning, we got good news out of Micron, a pre-announcement to the upside. What is one to believe when it comes to the AI trade here?
I think that obviously the AI trade has been the place to be for the last few years, and it's really been those AI enablers or more pure play AI. And in our process, we focus on high quality stocks, and so we haven't owned a company like C3 AI or some of the other unprofitable tech stocks. But I think now is probably the time to pivot away from some of the pure plays and go to more of bank shots on AI and names like. That would be in the industrials that aren't even tech stocks but are benefiting from all of the infrastructure spending. So there's some companies like Powell Industries or IMCOR that are more focused on electrical equipment or even construction of data centers. So I think there's still legs for the AI trade, but the pure plays have gotten really expensive and pretty demanding. Everything's got to go right for those companies at this point.
As you know, I'll have more on this C3 AI sell-off after opening bid on yahoofinance.com. I encourage everyone to check it out. Tom, besides C3 AI, Palantir has been on an absolute tear. I think it's up over 150% year to date, up 2,500% since the IPO. Can you make a case for riding that momentum, even though the valuation on a Palantir, another top AI trade, is absolutely exorbitant?
The short answer is I can, because in stark contrast to C3 AI, Palantir posted really good earnings. It was either last week or the week before. Not only did they beat, but they also raised guidance. So I think what this is underscoring is the fact that AI, the whole AI movement, revolution, whatever we want to call it, is maturing. And there are certain companies that are executing, and there are certain companies that are not. And if you can execute like Palantir, then you're going to get a really big multiple. Now, from my view of Palantir is that valuation can't even sort of be discussed, because if Palantir is trading 500 times forward earnings, is it that much more egregious than when it was trading 400 times forward earnings? We've
normalized it, Tom. We've normalized these valuations just for the average human out there, the average investor. Normally, I was taught, Tom and John, I don't know about you, 15 or 16 times is good value.
Yes.
Exactly.
P. Exactly, right? So we are so far beyond anything that would be considered logical that the only reason you can buy this thing is momentum. And so given that, the earnings were really good, the company is executing, and if you loved it at 400 times earnings and they're executing, I hope you love it more at 500 times.
John,
and that's sort of the way I view it.
John, let me get back to you. You mentioned you're on the search for high quality stocks. In a market where seemingly everything is rising every single day, define high quality for us.
We define it in a couple of ways. We look at quality from the lens of what we call management behavior. So what are they doing in terms of CapEx? So balance sheet structure, are they buying back stock? Dividend policy, what's their coverage of their debt and dividends? And so that's one lens of quality. Another lens is, what are the results of those capital allocation decisions? So that's, what kind of profits are they producing? Are profit margins high and rising? Are they generating high free cash flow or high returns on investment capital? Really just blocking and tackling of looking at the company's results.
Brooke, it is remarkable to see this crash in C3 AI. Now I believe the stock, using the price today, down about 67% from the 52-week high.
Yeah, and what we've seen, if you take a look at the YF Interactive, we've seen C3 AI lead the laggards when it comes to the AI space overall. If you take a look at C3 AI, it's down more than 50% year to date. And in the last year alone, it's down 36%. And so what we see is this discretion. I liked what the other guest said about these companies need to do it right. You're seeing AMD get rewarded year to date by investors, really rallying off those April lows. You also see Nvidia once again getting rewarded as well. And so it's interesting to see this dichotomy, I guess you could say, these differences between companies not necessarily putting out the results that investors want versus what others are doing that are really leading to these record highs, as you could see, holding on to that momentum year to date. Even Supermicro really gaining momentum down over the year, but up more than 50% year to date. Investors, once they hear something that they like, they're certainly flocking to these bigger names.
Yeah, memo to Jensen Huang and Lisa Su, don't reorganize your sales team. All right, it's time now for our question of the day. Goldman Sachs said today that consumers are finally poised to be walloped by tariff inflation. So the question is this: Does that sink the economy into a recession? John, what say you?
I do not think it will sink the economy. I do think Q3 is when we're going to start to see greater impact from tariffs. But as long as people have jobs, as they do, they'll continue to spend.
Why do you think, John, that consumers have been able to withstand higher prices? So many CEOs that I've talked to this earnings season, they're telling me they're out there raising prices, in some cases by double digits, yet the consumer hasn't completely buckled.
I do think it boils down to the job market. If people are still have jobs, then they'll figure out a way to spend. They may trade down, but they're still going to spend.
Tom, you think Goldman Sachs making a good point? They're saying that this tariff inflation hasn't really hit yet, could really start to spike in the third quarter and continue into the back half of the year. How much concern do you think that has for the economy?
I'm not really that concerned about it because I think it's the exemptions that are key, Brian. If you really read through the fine print on a lot of this, the administration, like it often does, has made a very splashy headline. But if you slice it out by the amount of stuff we truly import and what the much of our wallet share goes to, it's not going to be that bad for the consumer. It'll be something, but I don't think it derails the economy.
And Brooke, where we're going to see really, I think this thesis by Goldman put into effect is earnings results from a Target and a Walmart within the next 2 weeks. Now, both these companies, as you know, Brooke, they warned a couple months ago that prices were already starting to go up. I'm curious on how much they have gone up since and how they factor that into their holiday quarter outlook.
Yeah, boy, did Walmart make some noise when they announced that prices were going to increase, which then got the attention of President Trump. And then Walmart was a bit in hot water when it came to around the springtime after they did say that. But looking out, what we expect to hear from these companies is largely what we've been hearing. And that's the fact that the U.S. consumer has remained resilient, while the low-income consumer, that income cohort, has been under pressure. And also what we're hearing from different analysts on the street, including Dana Telsey at Telsey Advisory Group, is that based upon these, extended deadlines, the full impact of these tariffs are not yet hitting, that they're not expected to hit until the fourth quarter of this year into 2026. Also, what we've heard from companies like a Nike is this quote unquote surgical price increase. That she expects that these price increases will come in the following quarter after that August 7th deadline is now hit and past us, and then into the next year. And that as far as that impact on margins, what we're hearing from all these companies is their mitigation tactics, that they're doing everything they can in order to offset the higher costs of these goods. So we'll definitely expect to hear more about just how much of an impact it'll have on profit margins in this coming quarter, or rather their Q3 guidance and full year guidance is key to listen to.
Brooke, you know where Nike's pushing through these price hikes? It's in the Nike Alpha Fly 3. I went to go buy a pair yesterday. $295. That's like pre-tax, Brooke. I mean, it's crazy. I mean, what do these shoes do?
I mean, are you a marathon runner now, Sozzi?
I'm just trying to I'm not getting any younger. I need to pick up my speed somehow. All right, big thank you to my panel for today, John Campbell, Tom Essay, and the Nike wearing Brooke DePalma. Appreciate it. All right, the trading day is underway, and in financial markets, every second matters. What you do right now could determine your financial future. So here's my forward-looking thought of the day for you. Not every AI stock is created equally. The C3 AI crash could be essentially summed up as a wake-up call to you. Go back and check the quality of the AI names in your portfolio. Are the businesses truly solid? If not, consider selling before you are left holding the bag, and it could be a real ugly bag. Can't get enough opening bid? Then give my Opening Bid Unfiltered podcast a watch or listen. A new episode dropped today featuring top investor Jason Stein of SC Holdings, who has put big money to work in health and wellness products, such as Athletic Greens or AG1. You can watch this episode on Yahoo Finance and all streaming platforms, or listen in on your podcast platform of choice. Coming up, Julie Hyman has you for Market Catalyst. Don't go anywhere.